Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, January 21st, and Netflix had earnings today in after hours. So tech earnings kicking off today, and SPY did open with a gap up today, and the 35 EMA across the board does what it does best when it crosses up above the 30-minute 200 moving average, and that is act as support. So today we opened with a gap up, and we did take it all the way to the top of the implied move in SPY, which was 603. We actually closed at 603.05. So options did a pretty good job of predicting that. And really fast, I want to add that these trading ranges, I know I didn't do a video on them this morning, but they were out on TradingView today. So hopefully you did find them out there. If not, I do have a link to my TradingView in the pinned comment. Make sure you subscribe over there. So SPY did take it all the way to the top of the implied move. And if we do zoom back a little bit, you could see that we did stop right at resistance. So this was a previous support right here before we broke down right here in December. I believe this is December 18th. Yep, and then we dropped down. So this was a support level, then it turned resistance, and we closed right at that resistance level. And right here we are very overbought. And SPX, same thing. Over here we did open with a gap up, and then we pushed up to the top of the implied move and actually a little bit past it. So 60.45 was the top of the implied move. 60.49.23 is where we closed, and SPY closed up 0.92% today. SPX 0.88%. VIX closed down 4.75%. And in SPY, we did close within the implied move. And SPX, we closed just outside of it. And actually, hold on, SPY, we did close 5 cents outside of the implied move. So I take that back. We did not close within the implied move in SPY, but we were pretty darn close, and we closed just a little bit outside. I did sell 603, 604 bear call spreads here, and those did close green, even though we did close just a little bit outside of 603. And QQQ, we did see an up move here today as well. This 35 EMA did cross up here on Friday, and we have been seeing that follow through. So today we did open up, and we did initially get smacked down right here at this downtrend line, and we did close the gap. We came down and we bounced on the 1 hour 200 moving average. The momentum there was completely flat, but we did stay above it, and then we did come up and break above this downtrend line. We did have a green day in QQQ. We didn't quite take it to the top of the implied move, but we did stay above this 35 EMA. And we did get above this downtrend line right here, but also remember that down here we broke underneath it before getting pulled back up. So this is a place where we're overbought and we could get pulled back down. We do have some moving averages that are pointing down, and we are overbought. So QQQ up 0.59% today, VXN down 1.69%, and we did stay completely within the implied move today. And IWM opened with a pretty big gap up, and I did think we were going to pull back down. I did take 229, 230 bear call spreads, and those did close red for me today. I did think this 1 hour 200 moving average was going to pull us back down, but it did not. We gapped up to close to the top of the implied move, and from there we made a run to try and get to the 50-day moving average. So we did get outside of 229, and we closed just underneath that 230, which was the next day's strike. Big move in IWM today, up 1.92%. RVX also closed up 0.58%, and we did not close within the implied move here. And again, see how that 35 EMA turned into a support right after we did cross up above the 30-minute 200 moving average. And then lastly, we have DIA. DIA had another big move today. We gapped up above the 50-day moving average, which was resistance yesterday. And we took it to the top of the trading range, just under 441, which is the top of the implied move for the week. And we're just on Tuesday. DIA closed up 1.24%. And so far, we are within the implied move. Here we also have a downward facing 1 hour 200 moving average. And it will be interesting to see between IWM and DIA if those momentums come into play and we do get pulled back down. And before we head into tomorrow's trading ranges, let's take a quick look at Netflix. And I was trying to get a video today about the earnings move, and I got a little bit of a late start. I didn't realize earnings were going to come in the second market closed, so I did miss that. But if we switch over to extended trading hours, this right here was the expected move for earnings, 787 to 935, and we had a bigger than expected move, and we took it all the way above the top of the implied move here, 935, and made new all-time highs in after hours. You could see Netflix is just short of 1,000 here. So really big move, and that is going to leave a really big open gap here. So from where Netflix opened yesterday to where it closed in after hours was up 15.5%. So really big move. The expected move was just 8%, so it was double the expected move. So if you did see this chart over on TradingView and decided to go 935, that could open tomorrow paying nicely. So that was a recap of today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment if you have any questions, and if you've been cashing in on these setups, you can show your appreciation by hitting that thank you button. It's the easiest way to let me know that you want more. Alright, so starting in SPY, tomorrow's implied move is between 599 and 607. And that is from options. The 30-day average volatility is between 597 and 609, and the implied move on Thursday's contract is between 598 and 608. And to the upside, we do have a pretty open implied move here, and the range did contract because VIX came back down to 15. So we have a pretty small implied move tomorrow, just 0.59%. And at the very top of that, we do have this down gap. And this is the down gap that we saw after here we made all-time highs, and then we did consolidate sideways, but then once we broke down, we have this down gap right here that we didn't fill, and we saw that as resistance. So we have that right at the very top of the implied move here at 607, and then 608 is the top of the implied move on Thursday's contract, 609, and it's actually 609 and 7 cents. That is where we have all-time highs, and we made those back on December 5th. So we're not very far away from all-time highs, but we do have one bear gap in the way right here at the top of the implied move, and we are overbought. Then right where we closed, we do have this level right in the middle, which was previous support. Back here, right when we made all-time highs, we found support around 603. That is right where we closed today. Then underneath that, we do have the 35 EMA. And I didn't mention this in the first part of the video, but the 35 EMA, if you go back and look, did make it all the way up to the green. That is an overbought signal. If you're a little bit newer to this channel, you may not know what I'm talking about, and I'll bring it up next time I see it. But we did see that 35 EMA pull all the way into the green. And very often when that happens, we do see a pullback. So underneath that 35 EMA, we do have 599, which is the bottom of the implied move. And then 598 is the bottom of the implied move on Thursday's contract. Then we have the 50-day moving average. And most of the moving averages look fine except for this 1 hour time frame, which is pointing down. And I have a feeling that that's going to bring us lower and give us a little bit of a pullback here. And then that 30-minute 200 moving average for this time frame is underneath that up gap from last Friday. So then SPX, the implied move over here, is between 60.10 and 60.85. Again, it's not a very big implied move. We did have a contraction in VIX, and we have a 0.59% move in each direction implied. Then the 30-day average volatility, 59.90 to 61.05, and 6,000 to 6,100 on Thursday's contract. And to the upside, we have that last remaining bear gap that is just underneath all-time highs. So all-time highs here are actually in tomorrow's trading range. In SPY, they were a little bit above, but in SPX, the all-time highs are right here, and that is at 60.99.97, so pretty much 6,100. And that would line up with Thursday's strike right there. And then to the downside, that 35 EMA, and underneath that, we do have 60.10. So if we break this 35 EMA, the next level to look for is 60.10, 6,000 on Thursday's contract, and then 50-day moving average. We also have this downward facing 1 hour 200 moving average. I definitely think this is going to be a troublemaker. I think it's going to pull us downward a little bit, and we do have these two overlapping gaps. All overlapping gaps will fill. This is going to fill. It doesn't have to fill tomorrow or next week. It's clearly not in tomorrow's trading range, but this is going to fill. So if we do start trading down, bottom of this down gap here, 58.90 would be a good target. And then QQQ. The implied move for tomorrow is between 519 and 530. That is from options. 30-day average volatility and the implied move on Thursday's contract are the same, and that is 518 to 531. And to the upside, we do have this down gap. So that is the down gap. It's not right off of all-time highs, but it is after we did see that big drop here, and we swung back up, and then we gapped down, and then that gap was resistance, and then that gap is right here. So 530 is within that gap. 531 is the top of the implied move on Thursday's contract, and all-time highs I think are right here at 539.15. Let me double check that real fast. Yes, 539.15. So that is a little bit above us and not in tomorrow's trading range, but if we do fill this gap and maybe find a little support here, then that would be the next target later into the week or maybe even next week. All right, and then to the downside, we do have this downtrend line, which we did get above today and we did close above. If we break below that again, the next level to look for, 35 EMA. Again, this 35 EMA did pop into the green, which is a very strange overbought signal that we only do here on this channel. So I don't know anybody else that's tracking it that way, but it does seem that when the 35 EMA comes into the green, that is an overbought signal, and we did see that yesterday. So if we do pull back and break the 35 EMA, 1 hour 200 moving average is the next level. That momentum is completely flat, and the 30-minute 200 moving average is pointing down. I do think these two moving averages are going to bring us down, but we also have this 50-day moving average, which is pointing up. So with how overbought we are here, we could pull down to the bottom of the trading range tomorrow before we find some support. 519 on tomorrow's contract, 518 on Thursday's contract. And then we have this up gap from last Friday, and the bottom of that gap is at 513. All right, and then IWM, the implied move here for tomorrow is between 227 and 230, and that is from options. And the implied move on Thursday's contract, 226 to 233. That also lines up right with the 30-day average volatility. Always know where your 35 EMA is. It is outside of the implied move, which is another signal for a down day. It doesn't happen every time, but most of the time when the 35 EMA is underneath the implied move, we do come back to meet up with it. So this might come up and we might close down here. But first, let's look to the upside. We are not far away from that 50-day moving average. IWM is the only one here that is underneath the 50-day moving average. SPY, SPX, QQQ, and DIA are all trading back above the 50-day moving average. So that is the first level. If we get above that, 230 and 233 on Thursday's contract, we do have a down gap right here, and that goes back to after we made all-time highs, we started to slide, and then once we got underneath this 30-minute 200 moving average with the 35 EMA, we did a little roller coaster here, gap down, and that was resistance. So the bottom of that is 233.5, and that is just outside of the implied move. So if we do break out above the 50-day moving average, keep an eye out on that level. And then to the downside, again, that 35 EMA underneath the implied move, which could signal a down day. 1 hour 200 moving average. Typically, you don't want to go long at a downward facing moving average, and that is facing down. That could pull us down tomorrow. 227 is the bottom of the implied move. 226 on Thursday's contract. 4 hour 200 moving average is underneath that, and it's pretty flat. And then we also have a previous resistance level right here that we could test to see if it's a support. And before that, we did see that as a resistance here and here. And I think even a little more yet right here. So that is 225. And it is an important level. We have been trading around that level for a really, really long time, and it keeps coming back up. So 225 underneath our trading range. I would not be surprised with the way these moving averages are and the fact that we have an island gap right here still to fill if this all pulls us down. All right, and DIA. Lastly, we have DIA. Today we did take it to the top of the implied move for the week. So we only have weekly contracts here in DIA, and we started off with a pretty big implied move, $6 in each direction. We're down to $4 in each direction, but we're also at the top of the weekly contract. So with that being said, we do have 445 as the top of the implied move. The top of the weekly implied move is 441. We could see resistance there, especially with how overbought we are. And then underneath that, we have the 35 EMA and the 50-day moving average. The 50-day moving average was previous resistance. We could drop down to it and see it at support. 35 EMA came all the way up to the 50-day moving average. This is a critical level. We could get rejected down from here. And that downward facing 1 hour 200 moving average could definitely help with that scenario as well, bringing us lower, and we do have some gaps here to fill. The 4 hour 200 moving average is underneath the bottom of the implied move for the week. So if you're looking for a strike for in the money calls, maybe 4-hour 200 moving average, maybe a few strikes down from that would be a good plan. 426 maybe. And we also have this level right here, which was a previous resistance. We did gap completely above that. That could be a support right there at 429. So there you have it, guys. Just like many other nights, I am losing my voice, so I'm going to leave it at that. Have fun tomorrow. Trade safe. Make sure you take profits when you're off, and I will see you guys tomorrow night.